I'm investing $200,000 in the stock market, selling stock option contracts all in one single day. Let's jump in. I keep my stock option portfolio on my Robinhood account. Now, if you look, you can see that there are still some options here that haven't sold yet just because I sold them farther into the future. That was something new that I've added this year. And so while I plan to sell $200,000 worth of options, it looks like some of my stock options fell out of the money, meaning that the stock option contract didn't execute because the price of the stock was below what we had predicted it was or sold that contract for. Over the years, as I built this portfolio, I've learned not to wait on a specific date to sell all the options at once because some of those price targets that you're looking for haven't hit yet in the specific time period. So I've learned to take advantage of the stock price whenever it hits the target and then sell those into the future regardless of when the expiration dates are. Mainly because I've learned to pick a certain amount of stocks and stick to those and build a relationship with those and learn what their patterns are. That way, when you see that a stock that you like is at a certain price target, you pull the trigger without worrying about what time it is, knowing that you believe in that stock, it pays dividends, and you're willing to hold it for a long-term future. And so that brings me to the first thing that I do. I have now picked the 20 stocks that I'm going to be following or investing in during this year. There are some things that I always look for. First, as you're building your 20 stock portfolio, you want to make 5% trades per stock. For example, if I have a $200,000 portfolio, I don't want to invest more than $10,000 in one particular stock. This helps diversify and hedge your risk. Now, if you notice here, I do have 21 stocks out of 20, and that's because as I go throughout the day, I'm going to notice that some of these stocks are not going to be in favorable positions. So at the end of the day, once I sell the first 20 stocks, then whatever's left out, I won't invest in until maybe I see a much better position during the year, but try to stay within those 20 stocks. I'll likely eliminate it and then wait for next year to see if it's in a favorable position. The next thing I look at is, does this stock pay a dividend? This strategy that I use don't always work out in the way that you want. Look at this in particular. If every strike price had been met, I would have $0 in investment and I would have $200,000 in cash. But if you look, I still have over $100,000 in investment, meaning that over half of those fell out of the money. And so now the question is, since you're caught holding that stock, how long are you going to have to hold it? Well, this is why I look to make sure that these stocks pay a dividend. That way, I'm not worried if it falls out of the money and I have to hold this stock long term. Because remember, I chose these stocks because I believe in them and because they pay a dividend so I can hold them and still earn income, as well as sell that call option. And if it expires out of the money, then this year, like now, I still get to sell those call options for a year out. And those could pay a huge premium depending on how far out of the money I actually am. And the next thing is, it has to be volatile. It has some volatility or some demand for those stock options. There are some stocks that you simply just can't sell options on because they're not as popular and they don't sell yearly contract options just like you would like. There are some stocks within this portfolio that you will notice lack demand, meaning that I'm not allowed to sell the yearly option. And there's reasons for those stocks. And as I go through them, I'll explain why.